There's been a lot of talk about the potential privatization of Fannie and Freddie. Hedge funds that are watching right now, they really care. These are big positions. Do you think they should be privatized?
You know, Fannie Mae and Freddie Mac are really important in our mortgage markets and our global financial system, and we need to have some resolution of the crisis. I don't know the exact details of what's going to work out, but it's important that they're capitalized and they continue to operate funding U.S. housing markets.
I know there's a lot you can't say. Is it better would they be better capitalized the way they are, or if they're private? Without having an opinion on it, what would be just a better capitalization structure?
The biggest problem over a decade ago was not the mortgages that they guaranteed, but it was the subprime mortgages that came from outside of the GSE universe. So anything that passes their credit standards and is well-funded is probably going to be good for the U.S. housing market.
Yeah, and they got stuck with it as well. All right, listen, the AQR, which is or VNQ, one of the biggest ETFs following REITs out there, is, I don't want to say on fire, but it's been hot, up 17% this year. From your 30,000 square foot perch, is the real estate market, the commercial real estate market, really that solid right now?
Actually, commercial real estate slowed a bit at the beginning of the year. We've seen it across a bunch of areas. We did see REIT earnings growth slowed. REIT earnings were up to $15.9 billion in the first quarter. We just published those results recently. That's about 2% over a year ago, which contrasts to 7% growth over the previous year. This is part of the typical ebb and flow in a real estate economy. It's not warning there's a downturn. But the really important point is that real estate and domestic investment in real estate right now has also been a bit of a refuge from the trade wars that are affecting the broader market.
Why is that?
Well, because the REITs aren't dependent on imports and exports. Real estate markets are looking at leases on domestic properties. They're benefiting from really domestic business, domestic cash flows, and those are stable right now.
But they are dependent on companies to sign leases. And if companies aren't sure of their business prospects, they may be less or more hesitant to sign a longer-term lease.
That's true. And I suspect that's part of the reason why we saw real estate markets soften in the first quarter. You think about where we were, November, December, January. There were a lot of companies that might have been really reluctant to sign that lease, that 5-year lease, that 10-year lease. So we did see some softening in rent growth in the first quarter, a number of earnings measures. But fundamentally, the basics are still quite solid for real estate.
Lennar had its numbers out, and the guidance was not great. Stock's down just a little bit this morning. But overall, single-family home companies and the REITs that sort of encompass them, they've done well. In fact, the best, I think, in all the sub-universes of REITs. Why do you think that is?
That's true. The single-family home rental sector of REITs has done quite well. We have a lot of demand for housing and rental housing.
The rental sector
and the REITs are providing a lot of the rental homes for families that might not be able to buy or might not want to buy and do want a single-family structure in the suburbs. This sector has done well. Actually, all of the residential rental sectors in the REIT universe have been doing quite well. That includes apartments, manufactured housing, and the single-family home rentals.